What is credit?
Yeah, so credit is just a trust between you and someone else or entity that you will be able to pay them back. So if you need to take out a loan from a bank or anything like that, they will know you'll be able to pay it back based on your credit.
Okay. And then what is a credit score and how do you build it?
Okay, so the credit score is just basically your rating with your credit. So if you have good credit, then you will have a higher score. If you have a bad credit, you have a lower score. And a good score, a bad score, they range between 670 to 739. To build that credit, you have to have usage. You have to be able to show that you paid things off in the past that you on your credit cards or loans or whatever. And a good way to do that is by getting a secure credit card, especially if you're young. Getting a credit card when you're in college, you can have a secured card, which means that the bank will give you a card, and if you give them a deposit, like I think it's $400, you'll be able to use that as your collateral on the card. So you have a $400 limit, and you'll be able to pay off everything through that. So whatever you're using that credit card for, to go up for up to $400. So a secured card would definitely be a good way to build it, and also just using your credit card in general for little things and paying it right off.
So that goes into the next question as far as why credit is so important.
Yeah, credit is extremely important. I know it has a bad rep behind it because people a lot of times don't know how to use it, but having credit is power. Being able to use someone else's money to purchase things or start businesses or whatever you need to do, that's power. So the more credit, the better your credit, the more you'll be able to borrow, and the more you'll be able to use that for your own whatever you have got going on. So having credit is power.
Is having a good credit score, is that good enough to get a loan?
You definitely need to have a good credit score, but that's not enough. You have to have a good credit profile, meaning you have to have things that show that you've had these outstanding purchases, these outstanding loans that will show that you're able to pay it back. So if you just been using your credit card to buy gas and food, and you want to get a house loan, a mortgage, then that's not enough. You have to have different things that show that you're able to pay it back. So having a good credit history of things that can show that you have the ability to pay this loan back is more important than actually just having the credit score alone.
And is it okay to put debt in your in your child's name?
It is, as long as you're going to pay it back. If you're not going to pay it back and you're just going to mess up your child's credit score and credit profile, then no, don't do that. But using it the right way, using them, when you know that you're going to be able to pay the loan back and you have all the intent to, is definitely good because it builds your child's credit score at an early age. So it's definitely a good tool that should be used.
And then as far as tips and secrets, what are some what are a few that you know of or that you would recommend?
Okay, so I got some here. Like I said, the secure credit card, that's a good one for young people. Also, just using your credit card to pay off little things such as gas, food, the small things that you can pay back. Because at the end of the day, a debit card is really useless. If you know if you have the money in your bank account, you might as well just use your credit card and you just pay it right off as soon as you see it onto your statement, or whatever. So that's a good tip. Also, never co-sign on a loan. I mean, obviously, if it's someone that you trust and you know they're going to pay it back, that's a little bit different. But a lot of times, when you co-sign on loans, a lot of people may not pay it back or pay it back, in good enough fashion to keep your credit, where it needs to be. So that's not worth risking your credit score. So definitely don't try to do that. Also, knowing about credit limit increases, CLI, being able to increase the amount of the limit on your credit cards, that's definitely good because your credit usage, how much you use your credit card, it looks a whole lot different when you have a higher credit limit. So if you're using your card and you put $100 on a credit card that has a $400 limit, that's like that's what 25% usage right there. But if you're doing that on a card that has a $2,000 limit, that's way lower. So being able to ask your bank or whatever for a credit limit increase when you've had the card, for a good amount of time is definitely something you should do. Just knowing, like we said earlier, that your children can be used on your credit, having them you think of them as your credit heirs. Like we said, you can put things in their name if you know that you're gonna pay it back to help their credit out. But also you can put them on a card as an authorized user and then build their credit as well that way. And just know that bad credit is expensive. So the worse your credit is, the more you're gonna have to pay on the interest and everything. So it's definitely your best interest to keep a good credit score. So you have to pay all that interest. So yeah.
All right, man. That'll be all the questions for me. Go ahead and wrap it up.
All right. So yeah, anybody got any questions about credit or anything of that sort? Just ask the question down below in the comments, and we'll be back with more financial literacy for you guys. If you're watching this, then I know you care about your financial health. I know you want to build generational wealth for you and your family. So to make that happen, go ahead and leave a comment and ask a question. Leave a suggestion and tell us how we can make this better, or just share some knowledge and your personal experience in the world of finance. Make sure you subscribe to More to the Game and follow us on Instagram and Twitter. We got a whole lot more coming.